Okay, hi everybody. I think I've got audio now. Um, I wanted to show you guys an extremely nice day in the markets. I was in any shape to trade today. I did a whirlwind trip out of town on Sunday and Monday. Came back late Monday night, and I was pretty exhausted. So I didn't do anything, but I traded Sim today because I was kind of half asleep. Um, but I will show you on the chart. I'm going to show you where my entries were, where my exits were, and this was like a 450 tick day or whatever. I want to show you some of the Murray math levels that I'm using. This chart is at midnight. These levels are printed at midnight every night. This is the 24th, which was today, and you'll see a short entry at 74.80.50, and then a short long exit here. Now you'll notice that the market had pulled back here to this point. So what I did was I put a buy entry up here, and I usually put it between 1 and 2 points above the exit point for the short. Here's if you want to go long, here's the long entry way down here, and then that would be where you exit at 74.22. So I usually front run that a little bit because the market makers know about this stuff, and they really like to play games with people. They like to run it down a couple of points, and or to within a point or two, and then go back the other way, so people don't get filled down here either. They're either their entries for the longs, or if they were shorting it up here, and it goes back in their face. So the market makers like to do stuff like that. Anyway. Continuing on, let me just show you where our ranges were today. Short entry, which was at 74.80.50, and then the short long exit, which was at 74.22. And we've got a resistance level up here, right around 74.82, 74.84, right up in here. Okay, and this is going to be important to look at this short entry. This thing is optional right here because we don't know if it's going to pull back, but I've seen that too often to not discount that. So what I do was I'm going to put a buy signal about 6 ticks above that. That's 74.23.50. So I've got a buy limit order, goes in here. Here's my sell limit right up here at 74.80.50, right there. If it goes past it, it goes past it. So resistance is above that. So that tells me that short entry right there is a real good long target. And then I'll put my stop down here. I think my stop is set for 50 ticks. That's $250. Sometimes that's a little bit rich for people. So what I do is I can move it up. This is set up for the automated trading system. But if you're looking at putting at the swing low plus a couple of ticks, you can set it right down here somewhere. So 74.16.50, that would be that's 7 points. Or you could set it tighter if you wanted to. Okay. So what happened? This was the level. These were the levels at midnight, and they were kind of the same. I don't know if they were the same levels the day before because this thing automatically just redraws everything. So at midnight, and this was a DLL that I've been working on for like a year and a half, trying to get this thing perfected and trying to get levels done. So that's basically kind of the big picture of the market. The market, generally speaking, and this is a Tuesday, it's what I call an A day. What will happen is the market will pull back to an entry point and it'll go long, come up here, and then you can short it up here, and it comes right back down. So it'll look something like a big A. Sometimes if the market looks like it's going to be by a short, it'll be a V day, where they'll short the market, say for example here, all the way down to a level, down to here, and then run it back up. So that would be like a V day. Today was kind of an A day. I had expected that. Actually, I expected that because just look at the trend. I mean, it's just up. So, and actually, I think there was the long entry. There was a long entry off there. If you held overnight, you could have ridden it all the way up to either this level here and gotten out, or you could have ridden it up to this level. So I'm just gonna go forward an hour, I think that is. So we got an hour on the chart. The market's starting to sell off. We hit overbought. These are short-term Murray Math levels, and this Murray Math level that's on a 10-7 tick chart. I think this is 64. Yeah, Murray Math level is 64 with a square width of 1.5. So we got these Murray Math levels, and this was nice for relatively, I mean, if you want to scalp for a while, or you want to get a picture of what the market's doing short term. Murray Math levels are really, really good for doing scalping moves and doing short term moves, where if you've come down to oversold, then it'll go back up to overbought, and you can get into it at the bottom of resistance right there at 74.41.50, and then ride that down somewhere in here. So let's see what happens. So we go forward an hour. There's another. Let me go to this next bar. And I'd marked up the chart earlier, by the way. This was a pretty standard entry, 1 to 2 points above that. You're looking at 4 to 8 ticks. I'd rather get in the trade than miss it, because, like I said, that 74.22 entry, which was there. Sometimes the market makers run it right back down, right to that level. Sometimes they run it short, and you don't get in. You don't get filled. So we're running here. So I get filled at 74.23.50, and the market pounced down a couple of points to 74. What is that? 74.22.75. So you see, they didn't come down here. So what do? They can come down here. They're just buying it up. So they all go see that, and they start. The guys in Europe well, let's see, is this? Yeah, 315. So the market just opened in Europe, so they're going to buy it up. It's nice and cheap. They're going to buy this thing up. So here we go. We're screwing around. We're fiddling around down here. I kept my stop loss back a little bit farther, right down here. I usually do not move my stop loss to break even, or break even plus 1 or 2. The reason is because the market makers love to come back and grab those stops. So I just wanted to leave it here. I didn't think they were going to be past that oversold line, since they didn't violate the overbought very much that way, and then they pull back down. I didn't think they were going to do that. And you can see a lot of the consolidation right in this area here. So you could have safely said, okay, well, since this is a resistance area, I can move my resistance zone right here, mentally move that up 2 or 3 levels, like 3 levels back to the bottom of the range, which means your resistance level right there, which you would normally get out at 74.41.50, you move that up 3 ticks, or 3 levels, 1, 2, 3. So if you were worried about these levels up here, you could get out at that reversal line, 74.48.75, and that would be a nice, 74.23 to 74.48. That's what, about 25 points. That's 100 ticks right there. It's $500. So, or right around $500. So that would be a really, really good deal. So here they go. They're messing around. You can see there's no pullbacks. There's no deep pullbacks. These are all just shallow stuff, and it's just inching its way up. We passed that 21. I think that's a 21 EMA. The 5 is just kind of jostling around, but the alternate long entry is when it breaks the 21 EMA and it starts turning up. So you could have seen, you see the 21 EMA turning up right there, and price breaking above it. So you could have optionally gotten in there if you wanted to, and that's about 10 points above that. So that's about 40 ticks. So it's about $200 right there. You could have gotten in. I got in early at that kind of the optimal entry point right there. I got really, really lucky that the market makers didn't mess me up. So you can see here we're just making bar after bar after bar. These Heikin Ashi bars, see that 5 EMA crossed there, and that 5 EMA is right below those candles. So there's really no significant pullback. So that basically is a trending move. You have no tails on those at all. So that's definitely a trending move. So we know we're trending upside at least up here. So we're trending, we're going up. There was a little bit of a pullback back to the top of the range, and that's just to run people's stops that put their what they're doing is they're doing MML levels to do stops. What they'll do is once it moves a level, what they'll do, they'll move their stop up a level. Like say for example, once it hits the major pivot line right there, then people will move their stop up to the range top. What's that about? That's about 6 ticks. And then what does the market do? The market comes back and grabs it because they're very familiar with Murray math levels. So here we go. We're going up. We're what, 75 ticks, 80, 78 ticks. Okay, we hit resistance there, but there's no significant pullback. You see right there? No, there's like no significant pullback, no significant pullback, no significant. It didn't even come back to the stall weak reversal line before it went back north. So we're definitely going long. Definitely. So now we just hit the overbought line. Here, right about here is when it starts selling off. So I expect a little bit of a pullback right around to the major pivot or stall weak reversal, somewhere in here. There's your 21 EMA. There's your major pivot right there. So I'm expecting a pullback right down somewhere down in this level. So okay, so we're getting that pullback. Didn't make it to the major pivot. Here we go. Boom, right back upside. So now we're going to have a little bit of consolidation here. Now a little bit of a sell-off because the algos know about that overbought line. They know this was a previous level where we sold off. So people are going to start, the algos are going to start going, okay, let's get out right here. That's a nice, safe, easy trade right there. You go down to a level, you come right back up to where you were before. Nice, safe, easy trade. That's 65. That's a nice, easy $300 right there, or $600 if you wrote it down here and then right back up. So easy, very predictable $300 trade, and then you get out. See the pullbacks. Here's the pullbacks. They're running stops. You can see where it was a relatively deep pullback here. It violated that 21 EMA, and the markets know that they've got people that are putting their stops at 21 and 34 EMAs and all that kind of stuff down here, and they're trying to quote unquote protect profits. I've never seen the use in that unless you're scalping. If you're trading the targets, why would you do that? It just moving your targets or moving your stops up just makes the market makers tempted to run the market down a little bit to take out your stop. So I've got I know a trader that she's been trading a long time, and she does not use trailing stops, and that's why, because she says if you're confident in your levels, you're confident in your targets, why would you want to use a trailing stop? Your trailing stop is basically telling people that you don't trust your targets. So anyway, so as you can see, here we go. We're upside. Didn't even come close to that. So we're up 81 ticks. Between 75 and 100 ticks, I will usually move my stop loss to break even. I don't know. Yes, 100 ticks. So at 100 ticks, I'm going to move my stop loss to break even. So here we go. See, more upside. See what happens at the overbought reversal line. See what happens here. Okay, we just blew past that. We're right at where we were before. So, nope, we didn't do that. Here we go. We're blowing past the reversal. So if you took one contract off there, there's no reason to get out of that trade. We're just to keep going. There was no hesitation when we hit that previous level. So there's a lot more buying pressure there than there was previously. That's where they sold off. That was probably I think that was the Asians. The Asians sold it off here, and the Europeans come in and go, hey, we're buying up, baby, let's go. So we've got just a very, very shallow pullback here. Here's another pullback here. So that would probably be an Elliott wave. Your first wave pullback. Here's your second wave. Second wave is going to go back up to at least that bottom of resistance. And you could get out if you wanted to get out there. We're at 8 o'clock Eastern time. If you wanted to get out there. See, now the Murray math lines have shifted up a little bit, indicating that we're going higher. So we hit that resistance. We hit that resistance level. Here we go. We're going to go through a little bit of a pullback, stall weak reversal line, which is that's a weak reversal. That was not deep at all. So there's still buyers here. Just reading price action. There's still buyers here. And so here we go. So we're going up, going up, going up, going up. Looking right in this level here. I mean, we're already up 135 ticks, right? Excuse me. I'm having a little bit of a excuse me, a little bit of a frog in my throat this afternoon. 71, okay, 761. That would have been 150 ticks right there. $750. You could have got out right there, and that's the market isn't even open yet. It's 8:23. Market isn't even open, so you would have sat through that overnight trade for 5 hours worth of work, $750, and all you did was set your targets up here and sit back and watch the market. So here we go. There's still a lot here. We have another shift. Here's another resistance line. We have another shift here. So, and we've gotten this all expanded down here. So this looks like a pretty long move here that we're going to see. We're looking at seeing a pullback right in here. That's what I'm expecting. I don't expect for it to pull back much beyond 74.51.25. Don't expect that. But that was that was right about what, 8:30. So it was at the bond market or whatever. So they opened up. I think the bond market opens at 8:30. So there we go. We hit the stall week reversal, which coincided with that 21 EMA right there. Market bounce there, running stops. Okay. Oh, we're going to stop everybody else out. Now we're going to go north. Now we're going to keep buying. So we keep buying, we keep buying, we keep buying. Watch this overbought line right here. That's where I said, exit the long here. That basically is, that's a pretty decent trade. Okay, we're pulling back to the 21 EMA again. Here we go. We bounced off that 21 EMA again, which is pretty reliable. You could scalp it, or you could just basically here's an entry here. Here's another entry there. There's another entry there. If you came in at like 8 o'clock, you woke up at what, 8 in the morning or 8:30 in the morning, and you're waiting for that. You see this big long move overnight, and you're going, man, I want to get into that. So just wait for that pullback to that moving average. It's either 21 or 34. I think this is the 34 pullback, and then there's the 21 EMA pullback. And I find the 21 EMA gives me a little bit more of an entry. More entries here, so if I miss that move, I can always grab an entry upside. So, okay, I've got pullbacks here. Once this turned up, I'm counting these guys. Okay, I've got basically since this was so close together, I would tend to count that as just the consolidation. I would tend to count that as just one pullback there. We've got 2 pullbacks there, 3 pullbacks there. I don't see another pullback coming without a reversal, but let's see what happens. To tell you the truth, I don't remember what happened. So if you're trading, by the way, I did make a note here. If you're trading 2 contracts, you would take your first contract off at the bottom of that this resistance zone here, and then your second contract off right there. Move your stop to break even right here, and I think it did. It moved my stop automatically to break even at 100 ticks. So you would move your stop to break even and just keep going. So we got a little bit. Oh, here we go. Another 21 EMA pullback. Again, it bounced off that 21 EMA. So again, I've seen that's pretty reliable. So we're still upside. We're still upside. We're still upside. Watch that reversal line. We're 936. Cash market has opened. So they're just keep buying it up. It's changed that reversal, changed to a stall week reversal. So I would look for a little bit of a pullback in here. Let's see if we get it. Nope. Hey, look at that. We didn't get it. So there's plenty of strength there. So you could put your target. I'm just gonna leave it there. But you could put your target right up here, right up at 74.85.25, right in there. But I decided not to. That is, bam. Okay. So we're out. That's 228 ticks for the day. Let's see how now. This is the important part. Let's see how far this guy goes. Okay. Above that short entry mark, because what's going to happen is it's going to go above that short entry mark and come down a certain degree to that. So here's, let's say 74.85.25. It might go up to, no, I don't think it did. Did it? Yes, it did. Okay. So there we would be out at 74.85.25 at the top of resistance. that MML resistance level. That would have given you a little bit more, 74.80. So that would have given you, like maybe 5 more points. You could have just ridden it up at that particular point. So we got 228 ticks in the bank right there. Where's it going to reverse? Okay, today's high is 74.8725, and that is that's about 7. Well, it's about 7 points up. So what I would do is on my short move, okay, if it violates this, I'm looking at shorting it right up in here somewhere, 74.8175. I'm waiting. I'm going to wait for this 21 EMA to cross that short entry line before I get into that trade. Hasn't yet. Okay. We are at 74.7975. So I will short that guy, and I'll leave my stops right around there. So 74.80. So we're pretty close. Okay. I want to set my target. My target will be right down here, where that short long entry is, and I'm going to put it right down here because I think we're going to sell off a little bit more, because you saw the market, it ran way up and then here we go, marking way down. So there's your short entry. So I took a short at that short entry, and I'll just ride it out for a bit. So we're got some nice selling. We got a doji right here, that stall weak reversal line. So I'm looking at it pulling back over here somewhere. So it pulled back just to that 21 EMA. That's where your doji was. The second candle pulled back that 21 EMA, but we're still going down. If you wanted to wait for confirmation, then you would wait until price action dipped below that 21 EMA, and you've got strong selling here. Then you would get into a short right in here, and that's exactly what we did. That's exactly what the market did. So your short entry would be right around here, which was my short entry. So, and then cross your fingers about it not going up. Oh, here we go. Stall weak reversal. I don't think it's going to go up very much farther. We bounced right up to my entry, bounced down. So there's some nice selling. Okay, first contract would be at like 74.61, and then you would move your stop to break even right in there somewhere. So we're just walking through, boom. Okay, so it hit that support level. I don't know whether it would have gotten filled or not at that particular point, but we're still seeing some nice selling action there. So we reversed right there up to the 21 EMA. If it violates the 21 EMA, you have the option of getting out at that particular point. I think I had set my targets and I laid back down. Oh no, I think I was running an errand this morning, so I didn't see it come back. Thank goodness I didn't see it come back in my face. So you would have gotten in here at 74.80, 50, 74.79, something like that. Ridden it down to 74.68. So that would be a nice move right there. So that would be what, 12 points. So that's 50 ticks. That's $225 right there that you would have made. That particular point, I would have probably gotten out at that point and just waited for it to come back up to my short entry point. Okay, got to pull back to your 21 EMA. Violated my entry. Oops. Am I going to throw a loss there? Well, I was running an errand, so I don't know. So let's see what happens. The stop loss is still up here. Stop loss is still way up here. And it hits that, there you go, got that reversal line, got up to that resistance line, and that secondary resistance right there. And, okay, here we go back down. So there's an opportunity. There was an opportunity for a long. You could just reverse there, gotten back up, came back right in here where that 21 EMA turned back down, and that would have been nice. That would have been what, from 68.25 all the way up to, what is that, 82. So you're looking at what, 15 points. So that would be 60 ticks, $300. Another $300 you can put in your pocket right there. So that, you're well on your way to, right there. That's, there's from there to there. That's, $500. So watching that 21 EMA, trading that above and below that 21 EMA, on a 10-7 tick on the NQ, the YM works very similarly to that. So that would have been a really, really good day. Okay, there's my short entry, bounced off that short entry. You could have taken that, but again, we're not going anywhere upside. It didn't even hit overbought. You can see the trend lines right there. That it didn't even violate that trend line, just bounced off the trend line. So there's another opportunity to go short. And see, we get some nice selling off here. So we're going down, we're going down, we're going down. We still got that 74.61 where you could take, if you took your first contract off there. 21 EMA, pop right back up to that 21 EMA. You can see that. Another 21 EMA, pull back right there. It violated that a little bit, so you might have wanted to reverse there just for the scalp reversal. Maybe, maybe not. I had held into this trade, and here's why. Here's why I would have held in this trade, because what happened, what I do, violated that 20 EMA, and then came right back down in your face. And coincidentally, that was just at that major pivot right there for the short-term MML. So we're coming down, but you see there's not, we're not seeing those big pullbacks. We're seeing, buyers, coming up here, and the buyers just got tired, and here we go, we're selling it off. Price is high, so we're going to sell it off for a while. I don't trade especially to news. I kind of keep my eye on it, but I don't trade to it. And again, I was trading in live sim this morning. I was not trading in offline sim. I was trading in live sim. So whatever I had was what I had. So we hit the trend line. The trend line disappeared to the bottom side. So hit the major pivot. We bounced off that major pivot, went up to the other major pivot right there, and we're coming down. We violated this again, so that tells me we're not coming back up anytime, particularly soon. So we're up to 300 ticks right there. There's your support. So we keep coming down. There's some really, really nice selling. You can see how steep that 21 EMA is. That thing is pointing like almost straight down. I don't know what the angle is on that, but that's pointing almost straight down. So MML's just shifted. We're looking at a support level of 74.4150 right in here, and I think that was our level before. So we're looking at where you can get out here, nice little profit, or you can just wait for that short long for the exit right down here. And it's 11 o'clock. We're looking at, see that little pullback there? Man, didn't even hit the 21 EMA. So it's like, that's just profit takers there. So people are taking profits there, and okay, we're still going to go on and get down. I expect to see some more profit taking right in here, right in that support zone. So let's see if we get any. Nope. Well, we didn't get any. Well, there's a little bit right there. You can see that little wick there. That was just a little bit of profit taking right there. But people are still going, okay, the market's still going to sell off. So we're up. Here we go. There are 21 EMA. Profit takers. I said support zone, profit takers. So I would have expected to come down oversold or reversal or even past that. But here we go. So I'm sitting through this. You notice I'm sitting through this move. because it's still going to come down. It barely violated that 21 EMA again. And here we go. Keep going back down, looking at that support level. So we're right there at that, where it bounced before. So they're going to let it bounce again. It's 11.11. Nope, they're not going to let it bounce again. So more selling, more selling, more selling. Up, bounced right down there, right before oversold. More profit taking right there. Profit taking right there. People buying it up and getting out of their positions because they're looking at the clock and going, okay, it's 11 o'clock. Maybe we had some news in here. I don't know. I didn't look at my calendar. But we're still up at, over 300 ticks. So my practice right now, people could reverse right there and ride it up for a little bit, but see what happened right there? Violated it and then came right down in your face. Violated it again, came right down in your face. So there would have been 2 trades right there that you would have lost. And even if you kept your stop loss, no matter how far you kept your stop loss or tight, you still, unless you're scalping for like 4 or 5 ticks, you would have lost both of those trades as it violated the 21 EMA. Okay, so we're going to come down here. Didn't even make stall, weak reversal. Looks like probably a little bit of consolidation in here. So I'm looking at this bouncing like this. I'm looking at that as a consolidation zone right in here. So we may see consolidation there. Then again, we might not. If it plows down through that support zone, I'm looking at that as a major support resistance zone between range top and range bottom. Here, this is usually where you see your consolidation. So if you mentally take this and move this down, that range top, you move that down to support. Let's see, that's 1, 2, 3, 4, 5 levels. So the top of support would move down 5 levels. That's 1, 2, 3, 4, and 5. The level would be right down here somewhere. I don't have the extensions on this chart, but that's where it would be. So I'm looking at some consolidation in here. That short trade looks pretty darn juicy right now and pretty darn much of a certainty unless something weird happens. Okay, so we're seeing more of a pullback here. I would not have taken that long there. Some people would, and they would have taken it on the pullback right there. So, and that would not have been a bad trade right there. So you're looking at 74.40 to maybe a 10-point move upside to that stall weak reversal line maybe. And okay, here we go. And you would have gotten out of that stall weak reversal and been done with it. So you're looking at there's 6 points right there. That's 24. That's $120 right there as you put back in your pocket. So that I've noticed that this consolidation line, notices that 21 EMA has flattened out a little bit right there. I don't know if I've got a 34. If I got a 34 on here, 313.34. I don't have it. I used to have one on here and I don't have it. But anyway, you could put 34 EMA, and I will bet you that 34 EMA was flattening out right in here too. So that was telling the market that there was that's a consolidation level right in here. See how it's just consolidating right back and forth, back and forth, back and forth, back and forth. Just taking people's money. They're trying to scalp this guy, or they're trying to get into position. Scalp, scalp, scalp. Okay, consolidation, consolidation, consolidation. There's another one. There's another nice counter trend trade up to the upside. Murray Math levels have shifted down now, so I would be looking at 74, 51.25, 74, 53.50 for that reversal right there, because you can see that little green candle there. I'm still holding on, and people are going, why are you giving up all these ticks? Well, because I'm not a scalper. I scalp to levels. So here we go. Here's that level right there. Went back up to the range. So I don't know when we end this consolidation, but here's a nice long red run right there. So we possibly have stopped our consolidation. People, more buyers. I don't have order flow up in here or volume profile. Order flow and volume profile would tell you a little better story, but I wasn't worried about it. I'm just trading the levels. So Okay, here we go. We're bounced up a little. Here's the 21 EMA again. Violated again. At this particular point in time, what I would probably do is put a bigger moving average on there to find out exactly what's going on, because it's violating it, coming down, violating it, coming down, violating it, coming down. So the market is obviously respecting another EMA rather than a 21, at least for this consolidation move right here. Bollinger Bands, Keltner channels, something like that would probably tell you, exactly what that market is respecting. So now we've got lower highs and lower lows if it violates this guy. Okay, more downside action. Popped up there, a little more consolidation. This is what's aggravating about trading, because from 1111 right in here, we've just been in this big consolidation zone, and the Murray math levels show you here's oversold, here's right from oversold to overbought. So it's just showing you there's just this consolidation, and people could trade that if they wanted to. I wasn't paying any attention to where these short-term MML levels were, but you could very successfully scalp those, like from oversold to overbought. That's 74.34 to 74.48. That's 15 points. That's 60 ticks. That's $300 right there. So you could have scalped that for $300. Seen actually hit that reversal point. So it's coming back down. Let's see what it does at 74.32.75. A little more consolidation. Here we go. Are we going upside? Possibly, but I wouldn't see it violating this guy, because we're kind of in a range, kind of in a channel right now. Again, I have not even come close to my entry. Again, my entry is way the heck up here, and people are going, well, why would you give up that many ticks in this range just to hold to a target? Well, one of the reasons why, here's number one. I got one contract. I would have had one contract off here. One of the reasons why is because I'm pretty confident of these targets. The other reason is that even if this trade came back in my face, I'm not going to lose any money off of it. I make $5. Okay. Well, it's as if I didn't even trade that day. So if I was sick or if I was out or whatever, that's kind of how I look at it. Just because I love I really like these levels. So anyway, here we go. Okay. Oh, we just violated. Here's the reversal line. We violated the reversal, hitting support here, and the market just keeps going. So we've got a lot of selling pressure there. That latest sell-off happened at what, about 11:42, 11:40, 11:42. Yeah, 11:42. The market makers decided, okay, let's sell it off. And you can see the trend line down here. We have no bottom trend line. We got a top trend line. So you could basically, if you wanted to, you could do a trailing stop above that somewhere, if you wanted to. Okay, here's it shifting back down to support, shifting back down to support. And okay, we hit that reversal line, that new reversal line, coming back up to support. If it violates that, it may go back up to that major support line. Then again, maybe not. Okay, bounced off that 20. That 21 EMA is still pointing down, so we're still in a short condition. So 4 ticks above the level. Sometimes I'll do that, but if we got a lot of selling pressure right there, this selling is going to go back down here somewhere, or down to that support level. So why would I give up those 4 ticks? Let's see what happens. I mean, it wouldn't matter. I mean, 1 point is not going to be a big deal. Okay, so we 435. So we bounced off that guy. So see, I could have gotten out there, and I didn't. So here we go. See, I violated my trading rules. So, but then again, we got up into resistance. Here we go back up here. So I'm just gonna run it back through. So again, here's other Here's a resistance level. Here's another opportunity to go short, right up there. Going long down here and then going short there. The bigger picture is still downside, but smaller time frame, we're just looking at that. And so we're looking at 1243, 1244, and we're finally out for 461 ticks for the day. Now I'm looking at eventually it coming down to this level here, or actually between here and here, right in this range here. So if I was playing that short again, I would probably wait for the pullback up here and then go short. Anyway, that was for 1243. We're out of our trade for 461 ticks, and that was what, 2 trades. So we're looking at 461 times $5 a tick, $2,305 minus what, $10 for your commissions. So we're looking at that's a $2,300 day right there, and all you're doing is just trading to levels. So no big deal. Anyway, I've been on this thing for like 20 minutes, and I apologize that it's so long, but I kind of wanted to walk you guys through and to show you the short-term MML levels where you could trade those guys, and you could scalp very successfully and make even more money if you wanted to. This was, you could probably gotten 600-700 ticks out of that guy. Just playing the back and forth, watching how the market respects the moving averages. When it flattens out, looking at that, you could have gone to a little bit larger MML level, and it would probably have shown you this consolidation here in a range. But that's okay. We just wrote it down and hit our target, and that was it for the day. So have an absolutely wonderful evening and good trading, and I'll see you later. Thanks, guys. Thanks for watching.